Good afternoon, everyone. It's Wednesday, February 12th, 12:55 p.m. here on the East Coast, so we're just in the middle of the afternoon session here in the United States. Going to take a look at some setups that may be going on to the second half of the week, talk about some of the price action we saw today, and go from there. So take a look at the risk disclaimer, which should now be on your screen, and then we will go to the charts. All right, so let's talk a little bit about the Bank of England first. So we had the Bank of England inflation report released today, and the pound rallied after it. After the Bank of England left their forward guidance unchanged, specifically their employment threshold remains at 7%. We are very close to that level now. A lot of people were expecting, based on some of the things that Carney had said during Davos, that there would be an adjustment on that, maybe drop it down to like 6.5%, 6.8%, something like that. In a way, as a way to sort of reassure markets that rates aren't going anywhere anytime soon, due to a lot of the slack that still exists in the UK economy, still low inflation. So the Bank of England isn't as confident in the economy as the unemployment rate would suggest. A similar story to the United States, but they didn't change anything, so the pound rallied fairly aggressively. You can see pound yen is up 0.6%. Let's take a look at pound dollar. Pound dollar is up 0.75%. You can see it rallied pretty aggressively through that trend line. Up through 6.8% fib, now testing 165.79. That's 78.6% fib, which is not a level not a fib I put a lot of stock into. This 1666 high now is the next major resistance. So we'll see what pound dollar does going forward. Then the euro. We saw the euro dip today on some talk that the ECB was very seriously considering negative interest rates, which is not news. They have been considering it for a while. It's been a policy option that's been on the table for at least 3 months. I think really probably longer, but I can remember at least the last 3 ECB meetings, there's been some speculation about it going into the meeting. But somebody said they're seriously considering it, and we saw the euro sell off. Euro dollar is holding trendline support right now, but we're back within that wedge channel type thing. Going to need a move back above 136. If we get back above 136, I think there is, again, a possibility to sort of reload on that long trade. But until then, kind of just sit and wait and see what happens. Aussie dollar ahead of employment. All right, their employment figures are later tonight. It still looks pretty healthy to me. Pulling back a little bit, we could really see a dip down to about this 90 figure, maybe even 89, 80 or so. And it would still look fine to me. Only really a sustained move below this broken trend line would make me nervous about the Aussie dollar. But we do have an employment figure tonight, so we'll have to see how that plays out. Kiwi dipping tonight as well. Just missed touching that topside trend line. So we'll see if this is a pullback before we rally back up to finally test it or break it, or if we just continue lower from here. About 82.60 is that support level. Dollar yen still holding on the underside of this trend line. It's kind of just ticking along. One thing about dollar yen that's interesting here is that the Nikkei held that 50% fib at 14,974, so basically just call it 15,000. Held it perfectly, pulled back from here. So now we'll have to see about the Nikkei. If the Nikkei starts to sell off from the 50% fib, we could easily see a new low below 14,000. If we see that, the yen pairs are clearly going with it. So we'll have to see exactly how that works out. But CAD yen is another one worth keeping an eye on. Very near a retest of that 93.50 backside of that trend line type thing going on CAD yen. Dollar CAD. I haven't looked at dollar CAD actually very much. All right, you can see that Yellen spike higher has been sold off or back down near the lows around 109. 109.50 is the 200 period EMA. That's a very strong support level. So if we do probe that level, I would be keeping a very close eye on it for reaction. EuroCAD, speaking of, is at that 200 period EMA right now. We'll see if it holds up or if we get a close below. If we do get a close below 148, seems like a logical next stop if this pair is going to continue heading lower. There is, it's hard to ignore, very distinct head and shoulders possibility going on right now here in EuroCAD. Guess this would sort of be our neckline. All right, so basically below, I would say a 4-hour close below 149 would open up some fairly significant downsides. So that's something to keep an eye on as well. Equities, E-minis, all right, another decent day today. I don't know, up about 3 points. Off the lows, off the highs, kind of just kind of floating a little bit right now. 1840 is that major resistance level, all right, to keep an eye on if we do manage to squeeze up towards there. That 1788 figure or so is good support. There's some good moving average support in that area to keep an eye on. Other yen pairs, euro yen back down below its trend line, still worth watching. Sorry, Aussie yen is a good one to keep an eye on as well. If we see a continued risk move above 93, would look spectacular on Aussie yen. So that's one I'll be keeping an eye on for the next, week or whatever, however long it takes. Either we see a decisive pullback from here, or if we see a break above 93, it may be time to start piling into some Aussie yen longs. We could really very possibly see some short liquidations if we do manage to break that 93 figure. So that's something to keep an eye on. Especially with unemployment tonight. If we get strong employment numbers that pushes Aussie yen above 93 and we start to see the Nikkei recover a little bit, that could actually be a great trade for the next couple weeks. So keep your eye out on Aussie yen tonight for the employment numbers. Watch the euro at that trend line and go from there. All right, thanks for watching. Good luck trading, and I will talk to you soon.